Good afternoon, everybody. It's just past 2 o'clock. A little slow. Just had a couple of technical glitches, but I think everybody is now admitted who's logged on so far. So I shall go ahead. I think it will probably take around about an hour or so. Um, and I've got some slides to accompany what we're going to talk about this afternoon, and then we should have a chance for a question and answer session towards the end. What it's all about? Basically, where are we now? 2 weeks ago, 24th of September, Rishi Sunak announced his winter economic plan. There he is. And it really tied in with the fact, I suppose, mainly that the furlough scheme was coming to an end. We all knew that would happen at the end of October, and many people were wondering what was going to replace that, with the fact that we're still very deeply into this pandemic, and it seems with announcements every day that it's getting a degree worse. So we have got a number of new items that have come through. Some are just extensions of what was already in place, and a little bit more detail on some of those that have been around for a while, but are being extended over a period, some of them up to a year or so. And with the possibility of further lockdowns that have been announced, it doesn't look too good in the north at the moment. It looks like these support packages are going to be becoming increasingly vital to us all. Now, I've listed out those that are going to talk about this afternoon on the slide there. The first one, and probably the most important one, is the new job support scheme that's going to replace furlough. I've got quite a bit of detail on that, and some examples of how it is supposed to work in practice. We've also got some further news on the self-employed income support scheme, the VAT cut for hospitality that has been extended, some extra detail regarding the repayment of VAT bills that have been deferred, what you can do with your self-assessment liability that is going to be arising at the end of January, and some changes to the repayment terms of the bounce back loans. So the first one that we will detail, to say probably the most important, is the new job support scheme. This is government assistance for employers. It's going to commence on the 1st of November, and it will be available to all small and medium-sized businesses, full stop. And this is based on the company law interpretation of the size, and to be honest, that will pretty much cover most of the businesses that we deal with. If you happen to be a larger business, you can still be entitled to assistance from the scheme, but you have to have proof that you've been adversely affected by the pandemic. They haven't explained as yet how you actually go about that. There are still some details to be confirmed. So those in need of that, we can keep an eye out for the press releases on how it will be put into practice. It isn't necessary that you've been on the furlough scheme previously. This support scheme is completely independent, and employees who have never been furloughed before can be covered by the scheme if that is their particular circumstances. One thing that they've mentioned, and again, it's not particularly clear how they're going to monitor this, or you have to be able to report it, but it's supposed to be for people who have got a viable job, but are particularly impacted by the situation at the moment, so they're not able to work their full hours. But it seems that the intention is that when we recover or get back to some sort of normality, that they will be back in full-time employment. And it's a means by which the employer can hopefully avoid having to make somebody redundant in the short term, and try and carry through some support for the next 6 months, which is this scheme is open till the 30th of April. How they assess what a viable job is is difficult to say. Things are changing quite drastically, but it may be a case that those who have been furloughed right from the start of the furlough scheme could possibly struggle to be convinced that that is a viable job. But I say we're yet to get information through as to what actually qualifies or not. One thing to be sure about with the employee is the time that they've appeared on the payroll. So we have got a cut-off point again, like we had on the furlough scheme, is that they need to have had a real-time submission for their employment submitted on or before the 23rd of September. So this won't be applicable to any new employees at all after that date. So for monthly pay people, you're looking at those who had an August salary. They will all qualify going forward. The basis of the scheme is that if you are an eligible employee with a viable job and you're on the payroll at the appropriate time, that you must work at least 33% of your normal hours. So if you're bringing somebody back into work, they've got to work at least 33% of their hours, which the employer will be responsible for the full pay. Of the remaining unpaid hours in their normal working week or week in month, whichever way around they're paid, the employer will be responsible for 1/3 of those unworked hours and will have to make a payment to the employee for that. The government will be responsible for another 1/3 of the unworked hours through the claim, and that leaves the final 1/3 of the unworked hours as unpaid. So effectively, the employer has got to pay for the days worked, the 1/3 of the unworked hours, plus the other 1/3 that the government will claim first through the payroll, but then claim that 1/3 back from the government, which will be basically a month in arrears. It's a monthly claim basis. So the first payments coming through will be for the month of November, and that will be received in December. The effect on the employee is that they will receive pay for the time that they worked and 2/3 of the time that they have not worked. The support from the government is subject to a cap. We have that on the next slide. And that cap is, I don't know how they work these figures out, somebody must have a very special job doing it, and it's the very specific figure of £697.92 per month. That is the maximum that can be claimed back from the government. So if somebody's pay rate determines that that 1/3 of unworked hours in a month exceeds that amount, that is the maximum that will be it'll be capped at, and the employer will be responsible for the extra. As I mentioned, the grants will be paid 1 month in arrears, starting in December. And I suppose, as with the way that the furlough claim was working, this one does not cover employers' national insurance or pension contributions, which is the way that the furlough claim was going towards the end of its days. So it's only the gross pay of the employee that will be covered, not any additional amounts. The The job retention scheme, which was announced quite a while ago, back in the summer, that will also still be applicable. So if you've had somebody on furlough throughout the summer, then they're applicable for the job support scheme because they're working at least a third of their hours. Then, as long as their pay exceeds £520 per month for November, December, and January, that the employer will be entitled to the £1,000 grant for keeping that employee on. So that is still in existence. So the two schemes will interlink to a degree. Unlike the furlough scheme, there's no option for a top-up for employees' wages. So it will be a straight employer paying for the hours worked plus the 1/3 that they're required to cover. There'll be no scope for making a top-up for that employee, other than the fact that they may not receive the full grant. Although it looks like, I just need to check the details on the examples, but it may be that the amount that the government is meant to contribute is the maximum gross pay you can make for that 1/3 unworked, but that will show in the example I got shortly. The pay rate that is used to work out the pay is the current level of pay. It's not the rate that was being paid to them while they were being furloughed. So it's not related back to February earlier in the year or an average of pay for the previous tax year. It's what their pay rate is now. So that will take into account the new minimum wage rates, which furlough didn't. And also any pay rises that may have been made since the beginning of April. If an employee is made redundant during this job support scheme period, or is put on notice of redundancy, the employee is immediately disqualified from claiming the grant for that person. So they will take on the full responsibility for that gross pay. Because as I mentioned before, this is for viable employees, and if they've been put on a redundancy, that immediately makes them a non-viable employee. And the whole idea of the scheme is to hopefully enable employees to keep staff on a part-time basis rather than having to make them redundant. There was a big fear with furlough that once it's finished, there was going to be mass redundancies because there was no assistance anymore. This is giving that a little bit more help so that that all being well, it will keep people in work until things recover and they're able to get back to their normal working circumstances. So we have a couple of examples of how this will work in practice. Example number one is for David. He works a standard 5-day working week, and his gross pay for that week is £350. And due to working situation, the employer needs to reduce David down to just 2 working days per week. That is 40% of his usual working week, his usual hours. So that makes him eligible for the job support scheme. So when the pay is worked out, initially, the employer will be responsible for those 2 days that the employee is working. And in this case, at that £350 a week basis, it will be £140 gross pay. There are then 3 days that are unworked, and the employer is responsible for one of those days, which is £70. And a claim under the job support scheme will be made for the other third of the unworked hours, which is another day at £70. The remaining day will effectively go unpaid. So the employer's full responsibility is that he has 3 days of pay to cover, even though only 2 have been worked. So that will be £210. Plus the amount that's going to be covered by the job support scheme will need to be added to the pay. So that will make that £280 that would go on the payroll. And at the end of the month, the employer would submit a claim for the £70 that should be covered by the government. So we'll need to pay out £280 through payroll, £70 is reimbursed. So the net cost for that employee is £210 for the week. So there is an element of the employer having to pay more than what the employee is working, and that is the case whatever percentage of their usual working hours it happens to be. There will be an element of having to pay for no work being done. The employer suffers in that way, and the employee suffers also to a degree that there will be an element of the unworked hours that they will receive no pay for. So that's a very basic working week example. We'll move on to example number 2, which is Sarah, who is paid on a monthly salary, £6,000. And her employer is forced to reduce her working hours to 33%, and that will be the usual working hours in that particular calendar month. So it will depend on the number of days in a month as to what the usual hours were, the number of working days in a month, so it will be affected by weekends and such. Also bank holidays will come into play, so it's going to be interesting around Christmas as to how this is calculated. But it's effectively, in this case, the 33% means that the employer will be responsible for £2,000 of the monthly salary. The remaining unworked hours, again, 1/3 is payable by the employer. So we've got £4,000 left of salary. 1/3 of that is £1,333. That will be added to the pay of the employee. The government will cover a similar amount, so that will be added to the pay. But in this case, that exceeds the maximum that they're entitled to claim back. So rather than 1,333 being paid added in for that unworked day, it's only the £697.92 monthly cap. So that means there's going to be a bit of a shortfall for the employee. This will affect those on a higher pay rate. So the payment to be made out by the employer will be the £2,000 for the working hours, 1,333 for 1/3 of unworked hours, plus the £697.92 capped support from the government. So that will leave gross pay for the employee for the year of £4,031.25, of which the employer will then claim back £697.92 at the end of the month, to end up with a net cost of £3,333. So that's just an example to show how the cap can impact on the employee's pay. And there could be various types of this calculation, but these two really do get across the fundamental workings behind the arrangement. As I say, that there could be difficulties when we get into the bank holiday period. There will be further guidance on that. So there's 1 or 2 holes in the information that's come through from the government at the moment. Pretty much the way there was with the furlough claim, to be honest, that it sort of drifted through over a few weeks. We're only 2 weeks into this, and still a little way off before it comes into implementation. So we can wait and see if there's any more details. Of course, we'll keep you informed of those, but fundamentally, this is how the support scheme is going to work. So that is the job support scheme. So we'll move on to those who are self-employed and the self-employed income support scheme. Now, this is just an extension of what was previously in place. So for those who are self-employed and who qualified for the average monthly profits that have been worked out effectively over the previous 3 years tax years per their tax returns, and had other issues such as whether the amount that of profits from self-employment was above 50% of total earnings and such things, which unfortunately meant quite a few missed out. It will still be available to those people who initially qualified, and it's an extension of the 2 payments that have already been made out. That was May and August. There's going to be 2 more in November and February. The qualification is that you still need to have be operating either as self-employed or be a member of a partnership who was eligible for the first 2 lump sum payments, which was notified direct from the tax office, continuing to trade and are still adversely affected by the pandemic. So again, there's a rather vague qualification that your business actually has to be impacted, and not all businesses have. There's still quite a few who have not particularly felt the struggle as yet, as some have. From the guidelines, that if you feel you're not adversely affected, the indication is that you shouldn't claim. And I know some people have sent their claims back, or I've heard of even sending them to charity. It's not said how that's going to be policed as yet, or what checks will be made into it, or what proof you have to make. It can be very difficult for certain businesses whose turnover tends to be quite erratic at times anyway. But that's the idea. It is for those who have been adversely affected. So the next payment, as I mentioned, should be available from around mid-November. It will cover November, December, and January, and the government or the tax office will notify those people who they feel are still eligible for that, with a notification of how and when to put their claim in. The rate that this grant will be paid for the first amount, the November figure, is 20% of the average monthly profits, which was previously worked out by the tax office. And that will be up to a maximum of 1,875. So that is the most that you can actually get, and that is in total for the 3 months. The second lump sum, which is due to cover February, March, and April, it should be available in February, but they've not decided on what the conditions will be as yet. There's no set percentage or maximum figure that's being mentioned. They said they will release the details nearer the date. It will depend on what circumstances are at that time. Whether things have improved or deteriorated will have an impact on what that will be. But the indication that there will be some support, but it's a little up in the air at the moment as to the extent of what that support will be. And as with the previous grant, that is treated as taxable income as well. So will need to be included either within the self-employed accounts or in some way on the tax return to be taxed in the 2020-21 tax year. So that'll be a way for them to to recover an element of it. So again, it's pretty much the same as things were. It's just a general extension of the original plan. The next item we have is the VAT cut for the hospitality sector. So this is actually for hospitality and tourism. It was from July, the VAT rate was cut from 20% to 5%. That was due to finish in mid-January, but it has been extended to the 31st of March 21. That's a little bit of a bonus for that industry. And with the reports from restrictions being increased in the north, then it looks like it's going to be very, very important to businesses in that area who may well be facing lockdown again for a period. So it's been pretty tough. The one thing that I've sort of noticed with this, I suppose personally, really, is the application of how this VAT cut has been put into practice by businesses. The idea was that it would effectively reduce prices overall, encourage more people to go out to cafes and restaurants and any other hospitality areas, and generally increase the footfall. And in some cases, it's quite clear where the business has reduced the VAT and reduced their price, and it's clear that that is actually what you're paying. I've also seen it in some cases where businesses have actually kept the prices as they were, as a VAT inclusive price. So effectively, they're not lowering prices to bring people in, they're just taking more of a profit out of the price that they were charging beforehand. Not quite sure that the legality of that it really makes it clear to the individual customer as to what's taking place. I've seen it in a couple of instances where there has been some dispute as to what the overall pricing should be for an event, because the business was saying that the prices were quoted as VAT inclusive and will stay at the same rate. That's something I've got to look into, find out exactly how this should be applied, and whether people are not getting the individual personal benefit of that as the idea was from the government. Some businesses seem to have twisted that around a little bit, but that's the case anyway. The 5% rate will stay in place until the end of March. Quite possibly could extend further than that once we get into the holiday period next year, which will probably need some boosting again after what's happened this year. Right. The next slide is regarding the deferral of VAT. Now, back in the spring, all businesses were given the option of deferring VAT liabilities for a particular quarter. It depends on how you fell within that area as to which quarter it was, and the idea that would need to be repaid in full by 31st of March 2021, and that could, with other issues as well, it could cause quite a bit of a cash flow problem when we get around to that time of next year. But what the government have announced now is that you will still be able to repay in full by 31st of March if you want to or able to. But there'll also be an option of being able to pay the lump sum back in 11 smaller instalments, which will be interest-free, and that will be due during the 2021-22 year. So effectively, there is it'll be able to be spread out over 12 months rather than the one lump sum. So that could be of some good benefit to businesses who had a very large VAT bill for that quarter, because they weren't particularly impacted by COVID at the time. So again, it's just an extension of the repayment terms on that. They've not stated how that will be put into action, but it will probably be an online application to go onto a payment plan, but that will be interest free. Right, that's just a bit of a short one. Self-assessment. This is a bit of an interesting one. As one or two people have asked about what the circumstances are with their self-assessment payments, because used to paying in either annual payment in January or with extra instalments in July, and it was previously announced that the second instalment for the 2019/20 tax liability that was originally due to fall payable by 31st of July 2020 could be deferred interest and penalty free until the 31st of January 21 without application. And subsequent to that, when the tax office actually issued their statements for what was payable on 31st of July 2020, they'd actually reset the due date as 31st of January 21 automatically. So it almost pushed people into not making a payment at that point, although a lot of people still did. And that the problem with that is that it becomes payable 31st of January at the same time as your balancing payment for 2019/20 and the first instalment for next year. So it's going to become quite a large payment for a lot of people to do that. That's effectively 2 years tax in one go. So cash flow wise, that's not great, particularly with the VAT deferral as well, and possibly loan repayments starting to be made. Anyway, the government have recognised that there's going to be quite an amount to have to cover, with the situation not having improved at the rate they possibly believed it would do. So it's not something new that they've introduced. There is a time to pay scheme, system more than a scheme, that the tax office has had. It's been around for a long time. It actually first came about back in 2008, the previous recession, and it was brought in for people to arrange payment plans for various taxes, whether it's PAYE, VAT, corporation tax. All you had to do, and it's been around ever since, is contact the tax office before a liability became payable and try to make a payment plan. It's just been up until now, it's been very difficult to get something agreed with them. They'll try and push you into any other form of paying them, either taking a loan, a credit card, borrowing it from a friend, whatever it takes, rather than effectively using them as a bank. But now they become a bit more accommodating with their payment plans, and so this time to pay scheme has come back into play. And what they have said with this, as I move on to the next slide, is that you'll be able to pay your total amount that was originally going to fall due 31st of January 21. So this is the instalment from July this year, your balance from the 2020 tax return, and your first instalment for next year. You'll be able to pay that basically in instalments over the following 12 months. So you've got a whole year to be able to make those payments. The only difference and they'll be quite accommodating. It will just be a case of advising them that that's the way you want to go. It may be that you want to pay it over a shorter period, that they'll do whatever, but the maximum will be the 12 months. The one difference with this and the other schemes, though, is that there will be interest payable. That will be you'll have to factor that into the payment plan. So it's not a complete giveaway. They will charge interest. The tax officer's interest rate is not particularly high, so it's probably preferable to borrow money elsewhere if that was needed. And that interest will be charged on any tax that has not been paid by the 1st of February. So it will be automatic from day one up until the point where the full amount's been cleared. We'd have to bear in mind as well that there will be the possibility of the 31st of July 21 second instalment will be payable during that year as well. There's no mention of whether that can be factored into the payment plan. They're just mentioning at the moment the total amount that will be payable on 31st of January. There are conditions though, and quite severe conditions in some circumstances, in that basically to get something agreed with them, you've got to be sort of whiter than white over the last few years. People with a history of late payments will not be looked upon favourably. And as I've mentioned on the slide there as well, there can be no outstanding tax returns. So that will mean your 2020 tax return and all those before will have had to have been submitted for them to be able to arrange a payment plan. There can be no other tax debts outstanding or settlement plans already in place. Now that could be for VAT, PAYE. In some cases, it may even be for an earlier year self-assessment. So everything else has got to be up to date. So it looks like this is going to be an online application for most people who comply with these particular conditions. The tax that is owing must be between £32 and £30,000 to do this. And the plan needs to be set up no later than 60 days after the tax became payable. So you've got roughly till the end of March to get something in place. Otherwise, they'll be chasing for the full amount. Now, if for some reason you don't fulfill all of those requirements, it's not the end of the world. You might still be able to arrange a payment plan, but you need to contact them direct. You won't be able to go through the online system that they're going to bring in to do this, or that they've said that that's the way it will work. So I'll put on the screen there the self-assessment helpline, which you need to phone, and they will deal with things on an individual basis. It may be that you are not able to make use of the full 12 months. If there's not a great payment history, they might do it over a shorter period. I don't think they'll change the interest rates relating to certain people, but they could find themselves with certain restrictions on the way. But I think unless it's really in the worst cases, that they will be able to organise something that will help. But yeah, the main thing to be aware of on that is that there will be interest payable on it. Unlike the initial deferral of the instalment where there was no interest, this will certainly include that. Don't know whether they'll be putting their interest rate down before they get around to that date. So have to wait and see. And right, so the last thing on my list is that there's been some changes to the bounce back loans. Now, quite a few businesses took advantage of the bounce back loan because of the conditions that it was made available. And the main thing was that you could effectively take the money and repay it within 12 months without any interest or charges. So there's some businesses that have taken it and just set it aside in case they needed it. So they made use of the availability period for it, and may or may not use it. It might get paid back pretty much intact. But they've made some changes to this for those who were looking at a more long-term position. And the original setup was that the bounce back loan would last for a maximum of 6 years, so it would need to be repaid within the 6 years. That has now been increased to 10 years. They've got a longer payment period to settle that. It has said in some cases that would effectively halve the monthly repayment that's required, depending on when you actually start the payment. There will be some interest-only periods of up to 6 months that will be available, and also payment holidays. That will be once we've passed that first year that's interest-free anyway. And but they're still to release details of that, how that will actually work, how you need to apply, whether there's any conditions on a business to be able to do that. But it said that's something that will be available going forward. And they've also mentioned that looking at making the same extension available to the original coronavirus business interruption loan scheme. That was in the early days of the support. It wasn't particularly successful. It was operated by the banks who still tended to look upon this as a commercial exercise rather than assistance. So there was a lot of hoops to jump through. A lot of people got refused, and that was really why the bounce back loan came in, because it just wasn't doing the job it was intended to do. So there may be some people there who have got the business interruption loans. So it could be that they'll find they'll get an extension to paying those off. But there's not been any mention about interest-only periods or any payment holidays regarding those. It may come to pass that is applied in the same way. As I mentioned earlier, there tends to be a lot of finer detail that drifts through. It is only 2 weeks since the original announcement. With the furlough scheme and such things, there was information coming through 6 weeks later that changed the way that the eligibility for employees and such things. So I wouldn't be surprised at all if there's some further developments on that front, which will of course keep everybody up to date with through our newsletters and possibly a further webinar if that seems to be the best way to detail all of this. And really the last thing is on the bounce back loans, the application period has been extended up until the end of November. It was due to finish in October, so they've added another month on there for for anybody who's not taken a loan out at this particular point. So yes, that pretty much brings to a conclusion the presentation and slides. So we have got time for a question and answer session. I'll do my very best to answer if people can put their questions through the chat box, please. If there's something I'm not able to answer right at this moment, then we'll certainly get back to you with the details as best we can. It may be something that we may have to wait for further news coming out of the tax office over the next 2 or 3 weeks or so. So I'll just check the chat box. I did actually have one question that was mentioned to me earlier today, and that was regarding the 5% VAT on hospitality and tourism. It really is worth it. You pay a substantial amount. It could be, I say, a party that's been organised. There's not a great deal that can be done at the moment, but it really needs to be referred back to them as to whether they're applying the 5% VAT charge. So at least you know whether you're paying 5% VAT, but they're effectively keeping the additional amount. Rather than yourself making a saving. I know a lot on the documentation that you get through from some hotels and such. It's not exactly clear. It may depend on whether you've already paid a deposit as well, as to what the original tax point is. But it's often with these things that, although it's available, that not all businesses put it into practice. They're not maybe not quite as knowledgeable, or don't quite understand the full impact of it. So it is worth pursuing with people, not just accepting things on face value, but checking it, because very often probably the person that you work with on the ground who's doing the organisation is not aware of these things, and it's something that they need to refer back to their head office. So the last thing you want is to be charged 20% VAT for nothing. It doesn't benefit you, and it doesn't benefit the business that you're dealing with either. So yeah, certainly question that, because I've seen a lot of unusual things in that department. But, right, well, I've not had any questions through the chat box, so if anybody thinks of anything in the meantime, please do email me, and I'll hopefully be able to get an answer back to you on an individual basis. The webinar has been recorded. It will be put up on YouTube. I think it takes just a couple of days to get that available, so it can be looked back at as a bit of a refresher. Or if you're aware of anybody else who you think would find it interesting and informative, then please do let them know where to find that. That's on our YouTube site. And yes, in the meantime, if there is anything else that arises, we'll keep you informed, and I shall bring things to a close there. And thank you very much for attending today.